Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. Aggressive growth stocks? Yes, we have a couple. Bill Wilton, who is our aggressive growth stock strategist at Zacks.com, is here to tell you about them, as a matter of fact. Starting with one that I really have not heard of, but that doesn't really mean anything in and of itself. Rockwood Holdings, ROC, the ticker symbol. What do they do?
They're in the specialty chemicals arena. These are going to be companies that not many people have heard of unless you're in some type of manufacturing capacity. Okay. They do additives, pigments, other things for special chemical processes, okay, that the industrial applications would use. But they just reported quarterly earnings not too long ago. Their sales were up 26%. Obviously very good there. It's a strong improvement across all of their business segments, which is what you like to see. You don't want just one segment carrying the entire company, but so they had double-digit revenue growth in each area, and they're back to a profit. They reported a 47-cent gain per share this quarter, which was more than double the 21-cent Zacks consensus estimate. So not only were they back strongly, but even stronger than expected. One thing that I did like, while they did make some cautious statements about the upcoming nature of the business, they still managed to slip in that they're going to be focusing on organic growth as a priority, which is something obviously that we like to see as an aggressive growth stock. But I liked that they were slightly cautious because that shows that they're not too unrealistic, which is what I liked to see. Following the earnings results, the estimates jumped quite suddenly. We're now looking at a PE ratio of about 14 times next year's earnings. Pretty good value for what we're getting here. One thing that might scare some people away is the sell-off that we've seen since the earnings results. What I've highlighted here is the analysts' initial reaction to this quarterly number. Everyone liked it, everyone loved it, but it got caught in the midst of the recent turmoil that we've had for the past 5-6 weeks. So people are often, selling their profits, and now it's got some downward momentum. But if you do see signs of that stabilizing, I think you've got an excellent entry point here with some better than expected valuations coming off that number.
You mentioned organic growth. How is that being defined these days? Sales?
Well, organic growth is projects that you're going to be funding, within your own company, building new plants, things like that. Whereas as opposed to something like a merger or acquisition growth, that's just buying. Often they'll say you're buying growth, just some other company's EPS and just tacking it onto your own numbers.
Okay, I just had to check because things change when climates change. Imax Corporation, IMAX is the ticker symbol. I think everybody recognizes they're in the entertainment technology business.
Yeah, a lot of people probably know them. They're a state-of-the-art theater experience. They've got the digital imaging, sound, all that. They call it an immersive entertainment experience, which it truly is if you've ever been there. Their revenues more than doubled this last quarter to a record-setting level for net income also. The other thing that I like, they're expanding their footprint. They signed over 40 deals in the past quarter. And that's up from just 3 deals 1 year ago. So, they're obviously a little bit more optimistic about the future climate. Usually these theaters take about a year or so to actually implement and build. So it creates a nice backlog for them, which bodes well for them moving forward. With that expanded network, their earnings estimates have started to climb. Now, one thing that you're going to notice about them, their PE, the forward ratio is over 17 times, closer to 18, depending on the price action that we'll see today. But this is one thing that you have to notice about these. Their PEG ratio, the growth makes it a pretty decent value. They're coming in at less than 0.8, so that's also a good value there. Like Rockwood Holdings, we're also seeing a sell-off with them despite the good numbers, but they're actually closer to a potential level of support, which could make for a great entry level if you're able to get in.
All right, do you own either of these two?
I do not.
Check out more Zacks Rank Buy stock pick ideas on our homepage at Zacks.com. Upper right-hand corner, that's where we put 4 new stock pick ideas for you daily, 1 in each of the investing categories written about. With Bill, I'm Terry Ruffalo.